Dear students, welcome to the video lecture on state-owned multinational enterprises. As clear from the name, these firms are at least partly owned by the states. They have a superior access to public resources but are simultaneously more prone to political rent-seeking by the governments. At the end, we will see the case of Gazprom, which is Russia's state-owned multinational enterprise. So the first question is why state acts as a market actor? Generally, state becomes a market actor to offer a solution to market failure. Several sectors create a lot of value for the society and economy, which cannot be captured by the firm. So these sectors may not attract entrepreneurs or private capital investments. Similarly, sometimes the minimum economic scale MES is huge. For example, in case of natural monopolies, so the state has to make an investment. At times, state becomes market actor because of ideological reasons. For example, communist and nationalist governments may own a lot of assets. It can also be a political strategy of building social and economic infrastructure such as healthcare, education, housing, energy and telecommunications, etc. A few points about state-owned enterprises or SOEs. SOEs listed in the stock exchange are partly public and partly private. So these are hybrid organizations with the elements of the logic of state and private ownership. So they pursue double bottom line, that is complex social goals beyond economic performance. They enjoy preferential access to public resources. They face softer budget constraints and lower risks of bankruptcy and expropriation in other countries. However, at the same time, they are also more vulnerable to political rent seeking. To illustrate, let me take the case of Chinese SOEs. China is home of some of the largest SOEs in the world. In 2018, their combined revenue was more than 8 trillion US dollars. The Chinese SOEs are overseen, regulated, and managed by a central government agency called SASAC, or State-Owned Asset Supervision and Administration Commission. It appoints board of directors and top executives who are selected based on political rather than technical criteria. So they are mostly politicians and bureaucrats. Their ambitions and incentives are also more in line with the government rather than firms' economic performance. So this can lead to principal agency problem, which means that the majority shareholder, state in this case, pursues its own interest at the cost of the minority shareholders. So if the SOEs have developmental mandate, why do they internationalize? There are several reasons to it. First, to infuse the private money, private capital, and professionalize the management, to secure access to raw material and energy resources, etc., to generate wealth or dividends for the owner state, and last but not the least, to create zone of influence and exercise political and economic clout in the host country, that is to increase the geopolitical power of the home country in the host country. There are certain research findings about the characteristics and behavior of SOEs. First of all, these firms select countries with higher political risks, which are economically less attractive and where state ownership is considered legitimate. Regarding the projects, these SOEs engage in larger projects with higher potential risk and which are economically less attractive. A point about the perception of SOEs. SOEs are approached with caution because they are seen as government organizations. Host country stakeholders prefer that they make a greenfield investment or joint venture rather than acquire an existing national company. Hence, these SOEs should invest in legitimacy building exercise. In some cases, SOEs internationalize to escape the influence of home country governments. Now let us see the case of Russia's state-owned multinational enterprise, Gazprom. What are the costs and benefits of being owned by government, and how the Russian state seeks rents from it both on domestic and international fronts? This map shows Gazprom's gas fields, refineries, and pipeline networks. As a state-owned enterprise, Gazprom has a hugely advantageous position in owning upstream assets, both in Russia and abroad. In Russia, it owns or controls more than 60% of gas reserves. Three largest gas reserves in the world are waiting for development. It has assets in Kovykta and Sakhalin-2. It owns Russia's fifth largest oil company called Sibneft. Internationally, Gazprom is developing gas fields in Vietnam, India, Libya, and Nigeria. It has also made preemptive investments in CIS countries such as Turkmenistan, Kazakhstan, and Caspian locations. Gazprom also has sizable downstream advantages. It has an excellent petrochemical infrastructure and an efficient network of refining assets thanks to Sibneft. Its refining assets are close to major fields. It controls entire gas processing and gas transportation network in Russia. It is the sole authorized exporter of Russia's gas and has extensive market penetration in CIS, Europe, and China. Now let us list Gazprom's problems and vulnerabilities, which come primarily from its state ownership. The Russian government seeks rent on both domestic and geopolitical fronts. Gazprom has a developmental mandate. It is subject to price control. It has to build gas infrastructure in the Far East and increase domestic supplies. For geopolitical reasons, it has to offer gas to CIS countries at subsidized prices. In Europe, it is identified with the Russian government. It is considered an unreliable monopoly. It has adversarial public opinion in EU and CIS. Ukraine is another problem state. As the pipeline to Europe has passed through Ukraine, Gazprom cannot cut supply to the country even if it doesn't pay the bills. Further, Russia has conflicts with Ukraine, and both Ukrainian governments and people harbor anti-Russian sentiments. Further, government has put a cap on foreign ownership of Gazprom shares. It requires infusion of capital and technology, which is less likely without privatization. Development of new fields and aging transportation infrastructure also needs investments. Currently, Gazprom has limited ability of capital expenditure, limited current production capacity, limited technological capabilities to produce in Arctic fields, and limited capabilities to produce LNG, which it wants to sell in Asia. Now, a note on Gazprom's foreign operations. Its profits come mainly from exports. Gazprom has a strong strategy in CIS. It has secure markets and sources of supply. EU is Gazprom's most lucrative market. It is further building Nord and South streams to reach EU and has powerful partners such as Eni, Wintershall, EON, etc. Gazprom is now selling LNG in the East, especially China. It is also planning to integrate forward and sell electricity rather than gas. It has made forays in the UK and the US markets. Further, Gazprom has joint ventures in countries like Vietnam, India, Libya, and Nigeria. So you can see that Gazprom benefits from being owned by the Russian state and at the same time pays a price for it. Russian government uses its gas to deepen strategic ties with the EU countries like Germany and gain a geopolitical and diplomatic leverage. Similarly, more recently, Russia and China are geopolitically coming closer to each other. Supply of Russian gas to China further cements this cooperation. I would like you to watch these three videos so that you understand how SOEs fit in the geopolitical designs of the governments. So that is it. We come to an end of this video lecture. Please watch the next video lecture on economic liberalism and economic nationalism.